Hi, Biconomy friends! Kicking off 2026 weekly videos, and the crypto world is already buzzing. In the past 2 weeks, we've seen US legislative proposals stall, but analysts say that might be a blessing in disguise. Bitcoin ETFs have posted their biggest inflows in months, while Ethereum's new ETFs are attracting nearly $500 million. And the US government just confirmed it hasn't sold a single Satoshi from recent forfeitures. We'll also explore Belarus and Moldova opening their doors to regulated crypto banking, Iran's rising crypto usage amid unrest, CME Group's new altcoin futures, and Swift's tests with MiCA-compliant Euro stablecoin. There's a lot to unpack, so let's dive in. Prices first. Bitcoin traded mostly between mid-$90,000. Ethereum hovered near $3,200. Solana held around $135, while XRP steadied around $2 per coin. Privacy coins jumped last week. Monero peaked to $790, then retracted to $620. And Zcash reached $440, now back to $370. Chainlink is fluctuating around $13 a coin, and Stellar's XLM is holding support at 21 cents. Finally, Cardano is trading around 37 cents. Overall, market indicators still flash as oversold, and traders are taking positions for the next macro catalyst. On the policy front, the Clarity Act, meant to establish crypto market structure in the US, failed to advance. Analysts argued that passing it in its current form would have been very bad for markets because it included a de facto ban on tokenized stocks, brought government access to DeFi records, and prohibition on yield-bearing stablecoins. The bill's stalling gives stakeholders more time to negotiate clearer, less restrictive rules. For now, negotiations continue, and many in the industry see this as a chance to refine the legislation rather than kill it. While legislators wrangle, institutional investors have come roaring back. Spot Bitcoin ETFs posted $1.42 billion in net inflows last week, their strongest performance since October, with single-day inflows of $844 million. Analysts note that large whale holders have reduced selling, which tightens available supply and helps absorb dips. Ethereum's story is similar. Spot ETH ETF saw 4 straight days of inflows, totaling $474.6 million, outpacing new supply and lifting ETH toward $4,500. Network activity has exploded, with daily active addresses reaching a 28-month high and transactions topping 2.9 million. Even after a midweek pullback, the tone is cautiously bullish. Another round of sustained inflows could set the stage for higher prices. Investor sentiment even pushed Crypto Fear and Greed Index into greed territory for the first time since October. It's a powerful signal that mainstream capital is re-engaging with crypto after a brief hiatus. Meanwhile, Swift and SG Forge announced successful tests settling tokenized bonds with the euro-pegged EUR convertible stablecoin. This MiCA-compliant stablecoin is natively compatible with Swift's systems, and the trial proved that tokenized bonds can settle through existing payment rails, a major step toward mainstream adoption and blockchain-based financial instruments. Regulatory clarity continues to evolve outside of the US. Belarus's president signed a decree establishing crypto banks, joint stock banks that combine token services with traditional finance under dual oversight from the central bank and the country's high-tech part. The move positions Belarus as a state-controlled crypto hub while cracking down on unlicensed exchanges. And just nearby, Moldova announced plans to roll out its first crypto law by the end of 2026, aligning with the EU's MiCA framework and allowing citizens to hold and trade cryptocurrencies, although digital assets won't be recognized as legal tender. The finance minister framed the law as a way to regulate, not prohibit, crypto and warned citizens about its speculative nature. In more sobering news, crypto adoption in Iran surged to $7.78 billion amid mass protests. Chainalysis reports that Iranians are moving Bitcoin into personal wallets at much higher rates, treating it as a hedge against the collapsing Iranian national currency, rial, and a tool of resistance. Daily transfers and transaction volumes spiked, and analysts describe Bitcoin's censorship-resistant qualities as a lifeline for those operating outside government-controlled channels. The trend echoes similar patterns in other regions facing political and economic turmoil. Market infrastructure is also expanding. The Chicago-based CME Group announced it will list future contracts tied to Cardano ADA, Chainlink, Link, and Stellar XLM on February 9. This broadens CME's crypto suite beyond Bitcoin, Ether, XRP, and Solana, and reflects growing demand for diversified crypto derivatives. Adding to the theme of institutional adoption, the U.S. Department of Justice confirmed that none of the Bitcoin forfeited in the Samurai case has been sold. Those coins, along with other confiscated BTC, remain part of the strategic Bitcoin reserve, which now totals more than 328,000 BTC, and a Senate Bill seeks to accumulate up to 1 million BTC over 5 years. In summary, the first weeks of 2026 show a crypto landscape defined by cautious optimism. US regulation is getting a needed rework, Bitcoin and Ethereum ETFs are attracting billions, and Swift's tokenized bond tests hint a new wave of digital finance. And even countries like Belarus and Moldova are creating frameworks for regulated crypto banking. Meanwhile, on-the-ground adoption, whether in Iran's streets or through new CME futures, underscores that crypto's utility extends far beyond price speculation. As we head deeper into January, keep your eyes on legislative negotiations and ETF flows. They're likely to shape sentiment heading into the next major market move. Next week, we'll talk about the World Economic Forum annual meeting happening in Davos from January 19th to 23rd, as it might mark a great inflection point for digital assets. According to the forum, 2026 is shaping up to be a defining year where regulatory clarity and asset tokenization accelerate adoption and push blockchain from experimentation to enterprise-grade deployment. Leaders are expected to discuss how TradFi and DeFi converge, with entire asset classes moving on-chain. Thank you for watching, and I'll see you next week.